Good evening, traders. It's Mark here from the day trading room. It's currently 8:45 on 9th of September, Thursday, and I want to quickly review the past 2 days, Wednesday and Thursday's trades, and also to talk about the environment that we are in and how a really good trader discipline is crucial for this sort of action. Okay, let's go back to Wednesday first and see what we got up to. Okay, Wednesday we had a gap up situation. I had one of my hypotheses was this: if I change to a 5 minute, we can run through this. On the Tuesday, a lot of range bound trade, and the top of the range was this 10, 3, 11. You see how many times we've hit this: 1, 2, 3, 4, and that was just on a 5 minute chart. Now, one of my premises for the day after, which was the Wednesday, was either a push down to fill the gap, or if we broke through, I was going to look for a tag of the prior high and ultimately a gap fill from the previous day. So let's go back to a 1 minute chart and get the drawing pen out, and let's see what we got up to. So we got this the open here, gap up from here, push straight through, straight up. Ignore these lines here. These are drawn on from today. So the only one we're interested in is this line here and this line here. So we've got this bit of action. We pushed up. We paused at that magic 10, 3, 11 level, pulled back, and then burst through. Now, unfortunately, we didn't get on the end of that. But if you've done a research on your market you're trading, particularly the Dow, you'll know that in the first 15 minutes the likely move is between 30 and 50 points in the current environment. It changes slightly, but if you're aware of the first 15-minute move on average, and it gives you a little bit of a guidance on when to make your entry and when not to chase. So there's no use in chasing this if you're in the first 15 minutes if it's already moved 30 odd points, because okay, potentially it can go further, but you're reducing the amount. You're better to wait for a bit of a pullback to give you a little bit more leverage. So what happened is we got the pullback, exactly what we wanted. And where do we pull back to? Our magic number 10, 3, 11 from yesterday. That great level of resistance now turned into support. We'd broke through cleanly, we'd pulled back to it. Not only do we have that magic 10, 3, 11, we had this rising VWAP level. We'd had ticks earlier in the day just holding firm, showing us that there's real strength here. And we also had another one of my favorite little guidance tools, which you'll know about if you've been looking at the videos, is this here is 50% of the total move. It's approximate, we're not talking tick for the tick here, but we're talking approximately. That's our sort of level of interest. So we can afford to have our stop around this sort of level, just below the 75%. And then we're looking for our final target, which is going to be that prior day high or over 1,000 tick reading. So we went long here as it just poked under and just started to push back up. Now some of you can use this trend line here. You can put a little downtrend line here, wait for the break. You don't have to try and pick it. You can just wait for the break, and you can go long here, and you can put your stop there. However you choose to play it, it doesn't matter. Anyway, the long was here. What do? We scale out our first scale. Then we scale out our second scale. As we approach this high, we actually approached it and pulled back, so it was a great place to scale again. Held our last batch, looking for 1,000 ticks or the prior day high. We didn't get 1,000 tick, we got a prior day high, so there was our final exit. Fantastic little trade, lovely trade to start the day. After that, we pretty much drifted along. We pulled back to this VWAP. I didn't take this VWAP trade. It set up quite nicely, but the range was so low. You can see that was just a 10-point move. So it was really there wasn't really that much on during the rest of the day. We had this slight push down here. We had some good volume, some low ticks, and there was a potential there for that tick pullback trade. I like to wait for that tick pullback to zero, coincided with a round here. Would have given you a nice little scalp there. You might have taken a bit of heat if you're looking for a new low on that, but it's just a little bit of a dirty trade, and I didn't get involved in that. So that was one trade that we did. That's all we did on Wednesday. Great trade. Thursday, very similar situation. Some similarities anyway. We had a gap up, but this time we started pushing lower. The ticks were mixed, so that was a slight red flag for us. But there's the open, as you can see. We started pushing lower. The gap was caused by an overnight drift higher, and it was also helped along by the jobless claims at 1:30 p.m. London time. Now this is where these lines have come from here. This 10.373 and this 10.391 were levels of resistance and support from the overnight trade. And actually this 10.373 level was after we'd pushed up from the jobs data. We pulled back, we found some support before we found the new highs. That area we found support was this 10.373, which is why I drew this on today. So what do we get? Well, we got a push lower. We paused at this 10.373 level and we started to curl back up. And again, it's almost identical. Flip it round from yesterday. This time we're looking at the short side. You get the push down to some support in the first 15 minutes. You get a pull back up to the downsloping VWAP, coincided with the resistance level of 10.371. So there's our short entry. As soon as we start getting up curled out, we draw in our trend line, which we've done here, and then we're looking for our usual technique of our first scale, our second scale as we just popped to this low, and then we're going to hold one looking for our final target. You can see the ellipse of still here in here from this morning of the prior day's high to fill the range. Now we almost got there. We got within a few ticks. I thought we may just push through. We didn't. We started to roll back up. This trend line held. We had one more push lower. It didn't go, and as we pushed back up, that was my final exit. So 3 exits on that trade. A great trade, but it's very, very similar from yesterday's trade. One more trade from today was this one here around the 7 o'clock level. We'd pushed down. This was absolutely awful. The volume was so low around the lunchtime period in New York. The range was awfully slow. And then we just got this little bit of action, bit of volume coming in, pushing lower, pushing deeper. Missed this lovely little setup here, the pullback to the 0 ticks, coincided with here, rolled over again. We didn't get on the end of that, but we did get on the end of this fantastic trade here. You've got one leg, you've got 2 legs, you've got 3 legs, one final push, and where did it stop? Exactly at the level that we were looking from yesterday. That's right, the 10.311 magic level. Perfect entry. Now I don't stand in front of a train, but when you can see this tick divergence, you see it immediately pop straight back up. There's your long entry, there's your stop. Simple. There's a good level of support there. You've come a long way. There's plenty of cycles. It's about time for a larger counter trend cycle. There's the long, usual thing, scaling out here. We started to push back, and it just looked as if maybe just got it wrong. But this was holding very nicely, and we didn't actually get that much move in our direction anyway. We're in here, it started to push back. Happy to leave the stop under here. Quite often I will pull that up to break even depending on how far we go, but because the nature of the trade and because I'm looking for that counter trend cycle back up, then it made sense to leave the stop under there. Not only was that the 10.311 level, by the way, this also was the cash gap fill. So very, very key level here. You've got the cash gap fill at 10.387 on the Dow cash. You've got the 10.400 level around here. There's a lot of support in this level here, and every time we've approached it, 1, 2, 3, 4, it's pushed straight back up. So it makes sense to try and stay in for a longer trade. We've got our hedge, i.e. we've scaled out some, and we're going to look for longer targets, and it's exactly what we've got. We've got our next targets up here at the 20 points, and then we've just had one that we've kept small position, just trailing it up, and this was the last little bit. We've just been stopped out on this as it's just pulled back, 20-point pullback, taking the close. But the point of the matter is that that's three trades over 2 days. Now the volume is low, It's a holiday week. We've had a Labor Day on Monday. It's the Jewish holiday today, and the volume has been low. Now, this is where it requires trader discipline. I know I want to be trading. I want to be trading a lot. I want to be trading plenty of opportunities. I want to be trading with some good size. But I know that the opportunities, there's only a few opportunities. So you have to be patient. You have to wait for your opportunities. If you don't want to be in front of the screen, you just mark down your levels, put some alerts on, be aware. Don't get sucked into just little trades that aren't worth it. Wait for your setups. There's 2 or 3 setups a day. And if you miss them, you miss them. The important thing is this low volume market is not to be frustrated with it. It's just to plod away, to keep building your account up and wait for those real fertile times that are going to come. It might even come next week. You know, the children have gone back to school this week in the UK. I'm assuming it's the same in America. So as we go into next week and the week after that, we're going to start to pick up as we move towards Christmas. So there's potential there for some great trading opportunities. There's some great opportunities at the moment, but you've just got to pick your spots, be a little bit careful, not get chopped up in it, manage your risk, accept your risk, look for your levels and wait for the trade. And when the trade's there, then take the trade. Uh, but don't try and force the trades. There's a lot of discipline required as a trader. One of them's about taking losses, and one of them's about sitting on your hands. And at the moment, this past few weeks over the summer, we have to be very picky with our trades. We're getting some good opportunities in the first hour. Then after that, we're perhaps getting 1 or 2 setups. So it's not unusual to have 1 trade a day, 2 trades a day, 3 trades a day. When it's busy, we can have potentially 10 to 20 trades a day. That's how trading works. It's all about knowing when to push the pedal to the metal and when to just cruise. And at the moment, we're just cruising. So um, that's it. I'm going to come back again with another video over the weekend, summarize the week, and then perhaps we can look forward to some more volatility and volume going into next week. As usual, you can email me, mark at thedaytradingroom.co.uk, or you can visit the website, which is www.thedaytradingroom.com.